Welcome back. Today is the last full trading day before U.S. citizens head to the polls to elect a new president and Congress. For a closer look at how investors might prepare for the possibility of election-related volatility, let's speak with Grant White, Portfolio Manager, Investment Advisor at IA Private Wealth. Grant, thanks a lot for joining us. The polls are not clear. It is certainly there's neither one of the presidential candidates has had a meaningful and sustained advantage in the polls all through this campaign. There is the reasonable expectation of a disputed outcome and perhaps a lengthy period of time before the outcome is fully understood and known. Should investors be fastening their seatbelts for some volatility?
Yeah, absolutely. I mean, I think at this stage, we know what we can expect, and what we can expect is a bit of uncertainty around the election tomorrow. And especially as that's what we're seeing in volatility already this year. I mean, we've seen volatile markets throughout the year and last year, and I think that's going to continue for some time. With the polls where they are, I mean, I don't think there's any meaningful direction. Through the course of the last few months, we have seen certain trades coming into play where, you might have thought that people were leaning a little bit more towards a Trump outcome here. But more recently, we're seeing that reverse course again. And so that just, I think, is case in point to the psyche of what's going on and the psyche of investors and where they think things are at. And to that point, I think it's anybody's game still at this point. And so I would be really cautious about trying to make a big bet one way or the other in terms of where the markets are going to head in the next few weeks.
How seriously do you take indicators, perhaps quote unquote, like shares in Trump media or the Bitcoin price, which both have been rallying apparently on predictions that Trump will win?
The shares in Trump media, I think, are fascinating to watch because they have been incredibly volatile over the last number of months. So as you can, over the last few months, we've been seeing some increases, but more recently, we're starting to see a sell-off there as well. And so it's really hard to gauge what value that is actually going to, what value you can place on that. I think the Bitcoin trade is a little bit more interesting, however, because, I think that, people are starting to feel a lot more comfortable with Bitcoin as an inflation hedge. And I do think one way or the other, we might have some inflation coming out of this election, no matter what the outcome is. I mean, there's a lot of spending that's being promised in this from both sides in this election, and so I think there is concerns that inflation could rear its ugly head a little bit further, and with that, I think it's a bit warranted. I mean, we're also seeing an increase in gold this year. I mean, it's had a phenomenal year in terms of pricing, and so I think that's a story that will likely continue on for the next little while. But those will be two to watch for sure, and we'll see how things carry out. But inflation's one to watch. I also think bond rates are interesting actually as well. And, we've seen those fluctuating in the U.S. Quite a bit over the last little while as well.
Okay, we've got three stocks we want to talk about. Just before we get there, what is your broader market view once we get past the election period and any reaction therein? What is your view of markets more broadly over the next year or so?
Yeah, one way or the other, I think that the markets are going to like moving forward from this election. I mean, we're going to get past the uncertainty. We're going to get answers to some of our questions that have been holding back markets. I do think that the markets are looking strong, though. I think over the next 12 to 24 months, there's a lot of good reasons to think that things can go higher from here. I still like the U.S. market overall. I think that, having a diversified quality portfolio is the way to place this, because I do think there's going to be volatility. But in saying that, I think that that's going to play out well over the next 12 to 24 months.
Okay, let's talk about some stocks. One of them is BCE, the stock very much in the news today. It's announced a big and unexpected acquisition in the United States. It portrays that acquisition as a growth-oriented deal. It sees all kinds of opportunity to increase its operating cash flow, free cash flow, ultimately profit from the fiber optic footprint it's getting from Ziply in the United States, which it says has all kinds of growth opportunities that come along with it. What do you think of this news? And the flip side, of course, is that dividend growth gets suspended for at least a year. What's your view?
Yeah, I think this is a really interesting move. Admittedly, I mean, for years I've been talking about Canadian telecoms, including BCE, and thinking that there's nothing really interesting about them. From a yield perspective, I found safer yields elsewhere, and with little growth opportunity that I could really see. And so this is an interesting move because BCE is taking a move obviously towards growth, and they're doing something a little bit outside the box, especially for them, in order to find it by stepping foot into the United States, where they see a big opportunity. I mean, they're looking at households, the number of households in the U.S. that still don't have great access to fiber compared to Canadian households, and they think that they can make big moves there. And I know you just had the CEO on, and he was talking about other growth opportunities. So it seems to me that they're getting really active here, and so I find it interesting. I still have the company listed as a hold because it remains to be seen how well they can execute on this. Obviously, putting the dividend on hold has people, putting growth on hold anyway with the dividend has investors a little bit more pulled back on it, as we're seeing that in the share price today. I've got it as a hold because I'd like to see how well they can execute on this, but I think it's encouraging actually that they're looking towards another opportunity because for a while there, it kind of just looked like, what are we going to do?
Okay, Starbucks is another one that you are watching. Starbucks now headed by somebody who is perhaps the most closely watched CEO in the U.S. marketplace right now. That's Brian Niccol, who came from Chipotle to Starbucks a couple months ago, and the stock just took off on that news alone. Now he's got to deliver. What are your thoughts on Starbucks?
So I think Brian Niccol is absolutely the right person for the job here. I mean, he's got a track record of doing exactly what Starbucks needs, which is to simplify the business and get back to their core values and principles and get back to like what Howard Schultz ultimately envisioned for this company back in the day. And so I think he's the right person for the job. The task is monumental, though, at the same time. And so, I mean, what I like about this is I think they're heading in the right direction. Starbucks is going to be a challenge, though. I mean, you've got a luxury brand that has been brought to the masses, and now they're trying to figure out how do we maintain that luxury status? How do we get people to want to spend a little bit more and spend more time with us? And they have to get back to that human experience that ultimately made them so successful back in the day. It's going to be a challenge for shareholders, though, as well, because if you're looking at the revenue growth over the last number of years, it's come from the things that they've been doing, which has ultimately steered them away from that core vision that they originally had. So I think it's going to be a challenging time for investors, but I ultimately think this is the right move. We've got it listed as a hold because I think it is a monumental task, but Brian Niccol is the right person for the job. And so I want to keep watching it because if he is successful at this, I think Starbucks has got brighter days ahead.
Okay, let's finish with Berkshire Hathaway, the investment vehicle, of course, of Warren Buffett. What do you think?
Yeah, well, as I talked about earlier with the markets, I think you want to be holding quality, and there's no higher quality in the world than Berkshire Hathaway. I also think diversity is going to be important, and Berkshire Hathaway on its own gives you this diversity right within the one company. So if you're looking for an opportunity right now, we've got Berkshire Hathaway listed as a buy. Now, there's a lot of commentary right now about how much cash that they've been building up, and people are thinking that that's a commentary that Warren Buffett or his team is making on a market crash that's inevitable at this point. I think that people are making that call have a fundamental misunderstanding of what Berkshire Hathaway does in their process. This isn't a call on where the markets are going. This is literally them taking profits out of something like Apple in particular that has done so well for them, and they're looking for better opportunities going forward because they've realized a lot of the value that Apple has. And so all of this is to say is I think if you're looking for a place to put money and you're looking for an opportunity, Berkshire Hathaway has a place in a portfolio right now. It'll help you to weather the storms that I think are going to be turbulent over the next little while, but it's still going to give you that growth opportunity that everybody wants to have. So
Warren Buffett's still very much active. It was a couple of years ago that a couple of years ago at least, in which the company sketched out a succession plan. How much of the Berkshire Hathaway story is a Warren Buffett story, or is the market comfortable with those succession plans?
I think you got to be comfortable with the succession plans. I mean, they've been planning this for years and years and years. And so I don't think that, I mean, the day that Warren Buffett is no longer at the helm of the company, if you see a dip, I do think that that's an opportunity to look at this company again, because I think that there's a great team in place there that's been working together for a long time. And so I'm not worried about that because they built such a great process and a great system of infrastructure in that business that's replicable within the current team. And I think they're going to be highly successful long into the future. And they've got a lot of dry powder right now, as we've seen, being posted. And so I think there's a lot of opportunities for this company to take advantage, even if there is a market dip. They'll be looking for volatility.